Hello again. Welcome to the part 2 of this market structure class. And now, from where we stopped the last time, I hope you understand that market structure is a series of higher highs and lower highs, or higher low rather, and a series of lower lows and lower highs. So, now going to the part 2, I want you to understand one thing, that we can have structure in structure. What I mean by that is, on a daily time frame, we can have a specific structure, maybe a bullish structure on a daily time frame. Then when we go to a lower time frame, like on the 4-hour, we can have a bearish structure. It happens, which means do not count the trees while forgetting about the forest. The combination of those 1 trees you counting make up the forest. So while counting the trees, also bear in mind that you are in a forest. Always look at the larger picture, because when you trade against the trend or trade against the structure, it can be fatal. When you have a bearish, for example, you have a bearish market structure on the day and you have a bullish market structure on the 4-hour, and you are trading on the 4-hour believing the structure is bullish, whereas it's super bearish on the day, you may likely miss out on a good profit and end up losing a lot in the process. So how do we understand reversal when trading market structure? Like I said before, we have a high to a low to a high to another low and another high. Now, this is a bullish market structure. If the market were to reverse, some people do say, when you see this price making a low and then it goes up, normally you expect it to make an higher low, right? Then from the higher low, you expect it to make an higher high, continue the bullish structure. But if it fails to do that and makes a lower low, it may be an indication that this market is about to reverse. Then you see it breaking this low. Some people will take it that the market has reversed. If you note, in the first class, I said this to a high, to a low, to a high. That is bullish. While a high to a low, to a lower high, and a lower low is bearish. Now look at this. Look at this. This bearish structure is the same thing as here. You see? So because you are seeing this, some people will take it that the market has reversed. But personally, I made a keyword, a cash in the last video, if you could remember. I personally will not take this that the market has reversed. Why is that? Because when we look at Elliot waves, I do not trade Elliot waves. I'm not an expert in Elliot waves. I just know the basic that I use in seeing my structures at times. Elliot wave says we have an impulse move and we have a corrective move, and the corrective move is made up of A, B to C. This can be our A, and this be our B, and this be our C on this swing move. On this swing move from here to here. So if we have this corrective move A, B, C, has the structure really reversed? No, it hasn't. In fact, it's just pure organic correction, A, B to C. Then when the C is done, what do we expect? We expect the market to move from C to an higher high. An higher high of this, not this. So that is why I will not see this as my reversal. Like I said, you have to have a lot of filters to filter out trades. So what personally am I looking for? Like I said, the cash in the last video was, I am looking for the low, which is this low, the low leading to an higher high, the low leading to an higher high. This is a low and this is an high, an higher high for that matter. This is a low leading to an higher high. So I will mark this low as my low to break. Once this low gets broken and there is a closure under it, like a candle or two or three, depending on how you filter your trades, I will say the market has broken. So I'm expecting to see something like this. It may not be in a straight line. In fact, the market is never in a straight line. So I'm expecting to see something coming from this high to this, to break this low. Or if it doesn't come from this high to break this low, I want to see something like this. I want to see something coming from this high, maybe like this, but surely to break this low before I will accept that the market has reversed. It may come in waves, it may come purely maybe in a single candle close below it, 1, 2, 3, 4, 5, depending on you before. But what I want to see is this low to get broken. If this low doesn't get broken, I'm still bullish on the trade. Now, as you know, Elliot wave also gives us impulse moves, which means this can be, we have 1, 2, 3, 4, and this will be 5. Then we have A, B, C. But if the C gets to break this, the market has reversed. That is why once you see this structure like this and it finishes here, do not say because this low has broken. Do not say because this low has broken. Oh, sorry, it's not. Do not say because this low has broken below with many closes under it that the structure has reversed. But see one thing, if you are trading maybe trend lines like this, oh sorry, this thing is not accurate. Let me try and make it. I want it to align. Okay, good. So if you are trading trend lines, you are watching to enter a trade at this trend level, but then you might have a price come low here, make a lower high, then gets taken out like this. Then you will say, oh, this low has broken. Yes, this is a good low, but it is not the low to watch for a price reversal or for a trend reversal or for a market structure reversal. Then this trend line gets taken out too. Some people will say, oh, it will come back down here, which now support turning to resistance. It can happen if you place a, let's say this is a point of previous support, then you expect the market to come like this. Let me use this other. Then you expect the market to come like this, find resistance, and then come back down. It can happen. You trading the trend line being broken from here, then you expect it to retest the trend line and comes back down. It can also happen, but that doesn't mean that because of this trend line has broken or because this low has broken that the market is now bearish. No, until this very low gets broken is when the market becomes bearish. You can take a quick shot. That is why I'm saying on the larger time frame you can have a bullish structure, while on the lower time frame you have a bearish structure. So you have to watch the larger time frame to see what is happening. This is the last low leading to an higher high. This is the low to break, not this. It doesn't lead to any high. In fact, this low is a weak low. If there is a demand and supply here or support, it's a weak low because it couldn't get to this point of this high, talk less of breaking it. It's a weak low, whereas this low is a strong low because it led the market to an higher high. So that is how I will trade it. Until this low breaks, the market is still bullish. Not to talk of this. The same thing applies to bearish structures. Let me quickly draw. I think we may have a part 3 of this lesson. Let me quickly draw a bearish scenario. Okay, we have a trend line. Then we have a low to an high to a lower low, lower high, another lower low, another lower high. Now we are seeing this trend line. If this happens like this, some people will say they expect it to retest the trend line and then become bullish. It can be an early indication of reversal, yes, but do not predict or do not dictate the market, but watch and see what the market is telling you. Let the market talk to you. Whatever the market is telling you is what you should take. Now the market is saying this trend line has broken, yes, that is a possibility of a reversal, yes, but that is not reversal until this high breaks. Until this high breaks before you have your reversal. You can have a retest from here. You can have a retest of this trend line. Sorry. From here, you can have a retest of this trend line, and then the market comes here and make a double top and then comes back inside. You might have long there and expecting price to come back far up, which means you might be waiting for a bigger profit, whereas the market is not going to give you any bigger profit just because the market haven't broken the structure. But if this happens, the market comes back from it, returns the trend line as a fact, then comes back up like this. This high gets taken out. What will you expect? You expect an higher low. Is it an higher low to this or an higher low from here to here? That is the part I want to talk about now. Now you know how to read reversal, market reversals. Now, I like to see, let me say in a case of bullish scenario, in a bullish scenario, I like to see my trends reverse. The trend. I want to see the move, the impulse move correct at least 50% of the move of the previous move. If we have this move, from this point up to this point, I want to see this impulse move correct at least 50% of it before I take this swing as a valid swing low. Then if this makes an high again from this point up to this point, I want to see it make at least 50% of the move again to take it as valid. Then we see another up move here to here, it's tricky. You may want to see 50% move of this, yes, but then we have to take Elliot wave again into action. We have to use Elliot wave again. Elliot wave says an impulse move is made up of 5 sub impulse move. We have sub waves. So I recount here as 1, from the start 0 to 1 to 2 to 3 to 4 to 5. So we have 5 waves. And what does Elliot wave says when we have these 5 impulse wave and 2 correctional waves? Because this move, you may be expecting 50% of reversal as in correction of this 4 to 5, wave 4 to 5. Yes. Then what do you expect? You expect this move to go back up, make a lower high, and then comes back up to make a lower low. Remember, the low of this is the low to break, right? But there is this thing again with Elliot wave. When you use your Fibonacci from this point to the highest point here, this is the 50% level, this is the 61% level, this is the 78% level. They are bullish structure because you are taking all these waves as one. So wave 4 to 5, you want to see at least 50% of it or up to 78%, but this low doesn't break at the first move like this. You want to see at least 50% to maybe 78, or even just maybe almost equal bottom, equal lows, but not breaking it. Once it breaks it, it's pure reversal. Then, which means here you have 0 to A to B to C of this entire move. This entire move then becomes your 1, and this C becomes your 2. Then you have another move 3 to another move 4, then 5 upper anywhere. Are you getting it? So when you have a 5 impulse wave, 1, 2, 3, 4, 5, expect a correction for all, and not just the wave 4 to 5. Expect a correction from wave 0 to 5 when you have 5 impulse moves, and that becomes a subwave of a bigger wave 1. So which means you may be expecting, maybe you have a demand there or here. When it breaks, it's because this 5 wave is done and it's correcting for it as a single one. Now let me look at an example here. Now from here, what do we see? I'm still coming to talk about patterns, because somebody was saying maybe pattern is structure, but pattern is not structure. We can have structure in patterns based on the time frame, but we have to look at the bigger picture. Like I said, do not count the trees while forgetting about the forest. Here we have a low. Here. Then we have an high here. But before we have an high here, we have a low here. Let me mark it. We have a low here. We have an high here. But before we have this high, we had this one, right? So why am I not taking this as a high and this probably as a low? Fibonacci. And I said I want to see at least 50% correction before I take it as valid. So let's deploy Fibonacci from this low to this high. This is a 50% line, as you can see here, to this side. So this move came here, but it didn't get to the 50%. So I wouldn't take this as a high. I will see the market that is not yet, the high is not here. I still expect it to move up. And then it came down. It didn't. If it has gotten here, I will say this is a high. And I will use whatever low is made here as a temporal low. But then it didn't get to the at least 50%. It can correct down, no? But then I want to see minimum of the 50%. It didn't happen. So I'll take my fib again, upper. So this up becomes my high. From this side, what did we see? We see the low, making the 50% line. Yes, even coming back into it. Good. This makes this low a valid low. This is a high to break. This now is a valid low. But then we have this side. From this low, we have this side. Is it up to 50% of the move? Let's see. From here to here. Yes, it didn't touch it, but it's quite close. So yes, it could also be a move. Maybe we have our A, B, C. Do you remember where I mentioned the ABC? Now we have this low, which is 50% of the, which this move has organically corrected. This move from here to here. This move from this point to this point has organically corrected from this point to this point. This point. Then this move itself has organically corrected from this point is low to this high here. Then we have it breaking this low from this side to this low. Did it make a lower low to this? No. Structure is still bullish for me. But then what will I say we have? I will say what we have is from this point 0 to A to B to C. This low is still intact. So structure has not broken. So structure has not what? Has not broken. Then we have this move coming up a bit. Here we have a break of this low, which means the market has reversed, right? Now let's see. I want to deploy Fibonacci again from this very high to this low. Did this make 50% of this move? No. I will then extend it. From here, did it make 50% of this move? No. In fact, this low has then broken. Structure is now bearish. Hence, you see, this keep coming up and going down, making series of lower low, mini lower lows up to this point. Have we seen 50% of this move? No. Which means for the low to have broken, which means from this high or from this high, because this is the highest high to this low, is bearish structure. What I will expect is maybe from this low to make the 50% or upper anywhere, even this is a supply here. So for it to make anywhere from this 50%, but not break this high and then comes back making lower low, because the market here is now bearish. This low has broken, the market is bearish. Okay, let's look at, I think, patterns here. What do we see here? We see this. Good. Then we see this. Okay. What is this pattern telling us? This pattern is telling you this is a bull flag, right? A falling channel. It tells us when we see this kind of pattern, we should expect a move upwards. It will happen. But once it happens, don't forget, once it happens, this low has been taken out. This is the initial low to this high. Let's assume we could not see any other price data from here. So this is the lowest low and this is the highest low. And now we are from this highest high, we have this lowest low, which means market is bearish. Then from this high to this new low, we don't have 50% yet, but we expect a move from here to here, which means this channel is correct. We are still expecting it to come up to make this swing from here to here to be organic. Then either from here, we either go lower than this or we break this high. Once we break this high, then the market is bullish. Once we break this low, it's a continuation of the bearish market structure. Let's look at this very coin on the 4 hour for another scenario. Okay, before that, let's look at this image. I received this image from a friend. So here, this is a bull flag. I mean, this is a bear flag, a rising channel. What is expected of this? We expect this to move down, right? Because it's a bear flag or a rising channel. So, but will I say I'm expecting this to come down? Probably yes, but do not forget something. We have a structure in this. We have from this side to this low, then we have from this low to this side, then from this side to this low again, making a lower low than this. This is a bearish structure, right? Then from this low, we have an higher high. Even it's a minor higher high when we draw the line across, but there is a close above it. So we have an higher high, which means the market is turning bullish because this high leading to the lowest low has been broken. Then from here, what could we see? We see an higher low. Then from this higher low, maybe a mini low. Then this one higher low, which means there is a pattern there, a triangle. But from this lowest low, then we come to have another higher than this high again with a close above. Though we have the next candle is bearish, which this move, entire move, and this move is a fake out to trap traders, breakout traders. They are trapped. So that's a bull trap on this occasion and on this occasion. But it doesn't change the fact that the market is now bullish. So what will I expect from this scenario is maybe an higher low, then an higher high. Because this structure within this channel and even the overall structure, as we can see on this chart, is bullish. But then until a low breaks like this, if then this move comes down, then it takes out this low, This is the last low leading to the higher high. Not this. This is just a correction. Like I said, here we have some sort of triangle, a symmetric triangle. So I want to see this low gets taken out. Once this low is taken out and closes below it, then the market is bearish. So this pattern can still work out by giving us a breakdown, yes, but it doesn't mean it is bearish. The pattern is bearish, accepted, but the market structure is still bullish. I hope you understand. So, okay, perfect. Now see this. See this move. We have this move from this side to this low. Then what do we see here? We see a lower high, higher low, higher high to this. Like I said, some people want to see this kind of structure. When I describe that, maybe we have a low, to an high, a lower low, higher low. Sorry for my small mistakes. Then like this, making like this, forgetting that this is a low that leads to the higher high. But they take this low that once it breaks, the market structure has broken and is bearish. This is a exact same thing that happened here. We have a low, we have a small high with an higher low, then an higher high to this high. But then the market structure has not broken, because in fact, if we take a Fibonacci again from this move to this move, did it correct up to 50% of this move down? No. Then what will we expect? We expect to move it back down. This has corrected to the 50% of this move, which means it has organically corrected. It has retraced, and then once we see it coming down, this means makes the high. This high is a new high, and this is a low. This is a low. So what will I expect? You see, now when we have this move, what happened there? It got broken down. So if you now are expecting a reversal here, maybe as it makes this high, then an higher low, then a higher high to this high, then you expect it to come back here as a support and resistance trader and go up. You see how it failed? That's because we haven't corrected on this wave. We haven't finished the correction, and for this not to retrace to at least 50% of this move down, the low is not yet in. So this is not the exact low. It could have been if it has retraced up to 50% minimum, but it didn't. So it's not the swing low for this. The low is not yet in. So this is a low because it made this high. Then from this side, what do we expect? We expect from this side, we expect the low to come lower. But what did we get? We got an higher low. Then from this higher low, what did we get again? From this higher low here, this higher low, what did we get? We got an higher high, breaking this high, because this becomes a high to break. This is not even the high to break, sorry. This is the high to break. Sorry. This is the high we move from. I'm not taking all this into consideration. This is the high to break, because it's the high leading to the lowest low. This is just a correction telling us it has organically corrected. So we have an higher low here, then an higher high. That is an indication that we may have an early correction. But until this high breaks, the market is still bearish, because like I said before, we could have something from this low, maybe A, B, C, and then we get the move down. But if we don't get that, but then what we do we have again? We have another higher low, then this high gets taken out here with a close below it. That is a swing failure pattern. Then it comes down, still makes another higher low, and then what do we have? We have a far bigger break. Maybe this slightly close above it or not, I do not know, but then the market structure has changed to be bullish. So if we count from this lowest low, we have to count, because this will be the wave. This from this low to the high, breaking the high to break, will be our 1. That will be our 1. So we expect a correction, at least 50% of this entire move. We expect a correction up to from this level up to this level. But this high, being the high that first broke the structure, you see, it didn't make the 50% correction. It's close. You may choose to use it if it's close, but you may choose not to. It's your choice. So from this high, we're still expecting a low up to this to correct this entire move from this low to this side. For it is the one that broke the market structure. The market structure is now bullish on this particular time frame. So if, like I say year to year is 1. So we are expecting a move to a corrective wave 2. So let me quickly, okay, I'm saying now that this is 1. So I'm expecting at least 50% to be 2. Then maybe 3 into the future, 4, 5. Let me just shorten it like that. So what did we see here? Like I said, we do have sub waves. Then here we have 1, 2, 3, 4, 5. 5 sub waves, making this entire wave 1. Making this entire wave 1. You can see it right now, right? So this move corrected 50%. This move from 2 to 3 corrected 50%. And this 3 to 5, we are still expecting a 50% correction from this side. Then a larger correction for the entire move. So let's end the part 2 of this video here. It is a sample that is left. So in the part 3, I believe it will be very short. So we just round up what we have to say. Thank you for being with us.